what's going on, buddy?
Welcome back, man.
Thanks, man. Glad to be here
Yeah,
again.
I'm excited to get into what we're going to talk about today. I think it's going to be very helpful for your audience, for the people that we know and
Yeah,
love.
yeah, I think so too, because one thing about spring,
Yeah.
it's a new beginnings, right?
Yeah.
And so I think, especially in the home buying category, this is a really busy time of year. So,
Yeah.
so I think that be able to help some people, that'd be good.
Yeah, well, and I think a lot of people are starting to realize like they can't be held hostage by the rate. They need to get back out there. They need to, get back into the market. And the three Ds, right?
Right,
Like death, divorce, delinquency, those things are always going to happen. And
right.
so, like, people are always going to move no matter what. And I think people are like, okay, yeah, we do need to move. We do need to move back home to be closer to family. Or, Colorado Springs being a military town, our PCS orders just came in. We've got to
Oh,
move.
absolutely. And I think during COVID, everybody got hooked on that, those crack rates of, you know, 2.5 to 3.5 and 4.
Exactly.
And people think that's the norm.
Yeah, no.
But historically, they're between 5 and 8%.
Hmm.
So I think people are starting to realize that, okay, maybe what they said is true, that the rates aren't going to go down that. And if they do, I'd be shocked as anybody,
Yeah.
but I just don't see it.
Yeah, I think you and everybody else, man. Like I think that's the biggest thing, and that's the question is why haven't rates, dropped yet? A lot of buyers, like you said, were are waiting for that rate to
Right.
drop
Absolutely.
and it hasn't dropped. Can you touch on that a
Yeah,
little
let's touch
bit
on that a
as
little
to
bit because that's big, and because there's so much stuff on the news, right,
Mm-hmm.
about the rates. And right now, I think when I looked at this morning, I think they're like at 6.81%,
Mm-hmm.
which is below the 7, but not by much. But there's basically three factors what's going on. The first is inflation,
Mm-hmm.
right? We still don't have that under control. And the reason it's not getting the headlines because there's other stuff getting headlines.
Right.
And the second one is tariffs.
Yeah.
You know, when you look at tariffs, what people may not understand is that the tariffs aren't they're by the people that pay the tariffs are the people that are getting the products.
Mm-hmm.
So if something's coming in from China or whatever like that, the tariffs are for those people that the companies that are buying that. So costs go up.
Yeah. Yeah, I remember I was, building out this studio and the DJI Osmo Pocket 3 camera.
Yeah,
Like it went up $100.
yeah,
Like
overnight.
and people are like, "What the heck?" I have a buddy that's like, "Man, yeah, I should have bought one whenever you told me to buy one because now I'm out here paying another $100." So, yeah, I didn't even know that. So tariffs are paid by the consumer.
Yeah, the company actually passes some
Hmm.
or all that cost onto the consumer.
Wow. Wow.
So that's a little bit eye opening. And the thing that's floating out there right now is recession.
Hmm.
People are so scared of a recession, and I think that's why Chairman Powell, even though he's getting a lot of pressure from DC to lower those rates,
Hmm.
I think he's afraid if he lowers too quick that we could hit into recession.
Yeah. Yeah.
So we have a bunch of variables out there, and the biggest one right now is tariffs
Mm.
because that one is almost like, why do we do it?
Yeah.
Right? I understand the manufacturing
Yeah.
part of it, but at the end of the day, does that help the average American? And it doesn't.
Mm,
You know,
that's so good. So yeah, so a lot of people are waiting, and that's why, right?
right?
Like we're dealing with the not only the rate itself, but tariffs and everything else. What and touch on this a little bit. Can you explain how the right loan strategy can matter more than the rate itself?
See, I think people get so fixated on the rate because they're there to go, oh my God, that rate is this.
Hmm.
But they're not thinking that after the seventh payment, you can refi.
Yeah.
You can refinance that to a lower rate.
Yeah.
So it's almost like you have to get out of that moment
Mm,
and take a look down the road.
yeah.
Especially if you come to the realization, okay, it's not real comfortable right now because everybody's still used to those low rates.
Hmm.
But if it's your dream home and this is what you want, there's other options you can do.
Yeah.
And so sometimes I tell my clients, I go, okay, is this the home that you want?
Mm,
And they go, yes, good. Here's the rate, but you're not stuck to it forever.
Right. And especially like first time home buyers, right? I mean,
Yeah.
this first home is just a starter home.
It's
It's
just,
just to get your feet wet,
it's the baby
right?
home.
Yeah, it's not your castle. It's
No.
not your forever home. It's just where we're starting,
Right. And
right?
I like to tell my clients, I said, okay, you look at all these homes and stuff, but we're going to get you in a place where you can afford it, right?
Mm-hmm.
Where you can afford it comfortably. And all we want you to do, because we know that you're probably going to get a new home later,
Mm-hmm.
all we want you to do is build up your credit. Because when you get a mortgage and you pay that mortgage payment monthly, your credit score goes really high.
Yeah.
So, and you get a little equity in the home.
Mm-hmm.
So that's really for first time home buyers, that's the plan. And if they stay at that home forever, that's fine.
Yeah, speaking of first-time home buyers, what are, what is the number one thing first-time buyer should know going into this season, right? With this being a new home buying season and, maybe I haven't bought a home before. This is my first time. Yeah, Aunt Susie is a realtor and she's told me some things in the past, but what do I need to know as a new home buyer going into this season?
I think what you need to know is that keep your expectations realistic. And it's almost like I'd like to get my clients pre approved
Mm-hmm.
for a certain amount that I know they can control. They can control that payment
Mm-hmm.
and they can do better with the pre approval than as going into the buying the home.
Mm-hmm.
That gives them leverage because it's, man, it is so easy to get sucked into a home that's a little bit higher price
Mm-hmm.
and fall in love with it, and then you're scraping by every month. So I like to bring it back into reality.
Yeah, or you can't even afford it
Yeah,
entirely. Like,
right.
and then you go to make the offer, and then you actually see your numbers, and you're like, I can't even afford this home.
See, I'd rather them come in, right? We talk about it, find out what their monthly expenses are,
Mm-hmm.
find out, what they have for a down payment, things like that. And then we can, reverse mathematics and find out how much can they afford.
Yeah,
And so that is the plan I like to do with my clients
that's good.
because I don't want them to go into a home and then they fall in love with and then they can't afford it.
Yeah, yeah. What do you think the biggest mindset shift buyers need to make this year?
It's going to be competitive
Okay.
because we don't know how much is coming on the market,
Yeah.
but there's going to be a lot of interested buyers because
Yeah.
people have been sitting for a while. So it's gonna be a tight market. It's gonna be a competitive market, and so it's important to know that if you want to start looking for a home, let's
Mm-hmm.
go back, get pre-approved. So if you find that home,
Yeah.
then you can say, boom, here's my pre-approval letter. Let's make an offer.
Yeah. You're prepared.
Yeah,
You're
absolutely.
you're ready to go.
Absolutely.
That's so good. Can you walk us through your role as an advocate, and what makes your approach different?
Um, that's a great question, Uriah, because there's a lot of good mortgage guys out there and,
Yeah.
and women. So, but I think what I like to do is I like to get them in early, especially first time home buyers,
Mm-hmm.
because, or if they haven't bought a home for a while, because it's more beyond rate. It's more beyond um, how much they can afford. It's also how the process works and what do like a loan estimate. What does that mean? Closing disclosures. What does that mean?
Mm-hmm.
So when they get into the process, we go through the process and then we just turn around and say, okay, this is what it looks like. All
Mm-hmm.
right. So this is my job.
Mm-hmm.
My job is to make sure that I get you in the right place
Mm-hmm.
financially and that we're on top of what is required from the lenders.
Yeah. Yeah, that's so good. So a lot of people out here think, people still think that you need 20% down
No,
on
it's,
on a home.
yeah,
So let's bust this myth
yeah,
right now.
so here's the reason why 20% down is so important
Okay.
is because if you have 20% or more
Mm-hmm.
as a down payment, you don't have to pay for mortgage insurance.
MPI or
Yes.
mortgage private insurance.
Yes.
Okay.
And what that means is if you have to pay that, that goes into your rate. I mean, that goes into your payment,
Yeah.
right? But not everybody has 20% down.
Right.
So new home buyers can get as little as 3.5% down.
Mm-hmm.
with the first time homebuyer programs, and anybody can go from 5% to 19% they want to.
Mm-hmm.
So it's open. You can put down what you can afford
Mm-hmm.
and what's required for the program. You don't have to put 20% down.
Okay.
Doing 20% down just saves you money
Okay.
on your payment.
Yeah, that's really good to know. What are some payment programs or assistant programs that buyers should be in the know about, and maybe they don't know about it?
Well, there's Fannie Mae and Freddie Mac have first time homebuyer programs,
Okay.
and that's usually a down payment of 3.5%. On a regular conventional, because Fannie Mae and Freddie Mac are conventional loans, if you're not a first time home buyer, it's usually 5%. So
Mm-hmm.
that leaves them 1.5. Then there's CHFA, which is down payment assistance with people that have lower incomes. And you have to find a CHFA mortgage person to do that. And there's one that I learned about that I got signed up with is where you get into a study
Mm-hmm.
because they're trying to find out if you have the right down payment, how does that increase you keeping your house? So it's a private fund
Mm-hmm.
and they help with down payment. And then the participants are in this program just basically doing forms,
That's
right?
awesome.
And so it's a lot more complicated than that, but that's like a private
Mm-hmm.
program
Okay.
that's available.
Private equity type
Yes.
setup. What advice can you give to people that are, maybe they feel like they're cash poor, you know,
So
but they
yeah.
still want to buy. Obviously these down payment assistance programs are helpful, but what can you say to that person there?
So let's talk down payment first. So with Fannie Mae and Freddie Mac, your a relative can actually gift you down payment. Okay. And what that means is they basically write a letter that said, let's say I'm getting it from my mom and dad.
Mm,
It's basically we don't expect Jimmy Oliver to pay us back. It's a gift. So that's one thing they can do. Okay. I think part of the problem that we see for first time home buyers is they don't understand that they also have closing costs,
mm-hmm.
that they have to have that money in there.
Yeah.
And so that's one thing. One of my first questions is how much cash do you have available, right? Because it's not like all of a sudden you can just drop a bunch of cash in your bank account because the
Right.
feds are watching that because it's got to be
Well,
seasoned
you gotta
money.
you gotta report all that,
Yeah,
right? So
right.
yeah,
So those are a couple of things that I think that, especially on first-time home buyers,
yeah.
that they really need to understand.
That's so good. Moving into the refi.
Yeah.
Okay, so Jimmy, why the hell would I refi if I'm sitting at a 2 or 3%? Why would I refi into a 6%? Or, maybe the question is like, when is the right time to refi?
Yeah, the refi is really a tough animal right now because you're right. We have so many loans from that 2.5 to 3.5. And I think the only answer is if you need the cash,
Yeah,
right?
right.
Again, we're talking about don't get so locked in because we can refi later.
Yeah,
And it's not, and the refi is not to burn and churn a client,
right.
right? Just to refi them over and over. And some people do, like every 6 months, they want to refi them. And,
Yeah,
you
it's
know,
not worth it.
no, it's not fair to the client
Yeah,
because they're still paying closing costs every
yeah,
time.
yeah,
So people that just refi every 6 months or after every seventh payment, then they're not treating their client in the best interest. But it could be that, let's say that I want to do an addition to my house.
mm-hmm,
Okay. Well, I don't know where the payment's going to, the interest rate's going to be in 6 or 7 months or a year,
mm-hmm,
right? So if I want to do that to my home now, yeah, I'll go ahead and I'll do the refi. I'll be at that 6, 7%, whatever it is, and then I'll turn around and if it does go down with the next year or so, then I'll just refi it.
mm-hmm,
But I guess it's a matter of what's a priority for my client.
yeah,
Because if they're doing like adding on,
mm-hmm,
well, they're just building equity into their home. I mean,
yeah,
their value's going up.
yeah,
Or if they want to get out of debt,
yeah,
you know, because we've seen credit card debt is at its highest
Oh yeah.
that it's been in a very long
What is it
time.
that the average? What is the average? Isn't it like something close to $30,000
Yeah,
in debt right now?
yeah,
The average home
yeah,
right now, they're in $30,000 worth of credit card debt.
yeah. And then if you look at that's like 22%.
Yeah, yeah,
So that could give them some breathing room,
yeah.
you
Get a
know?
little bit of cash out of the house to even pay down your credit card debt.
Yeah,
And not have to be hit over the head with the high interest rate credit cards are,
yeah.
right? Like where you're making the minimum payment and you're not doing any good.
It'll take you
Like,
40 years to pay
yeah.
off that credit
And
card.
that's what they hope, man. That's what the banks hope. They
Yeah,
hope that, you just only can make the minimum payment and they're just, cleaning up, you
yeah.
know.
And another reason to get out of that credit card debt is the fact that it's only going to go up. If the
Yeah.
rates continue to climb, then that's going to go up.
Yeah.
So you might as well cut your losses,
Yeah.
bite the bullet, get out of credit card debt, and take care of yourself.
Yeah. What is your advice to someone who's unsure if refinancing is even worth looking at?
Call.
Yeah.
Let's see what your plan is.
Okay.
Because let's see what it's going to cost additionally to do that. And also, one thing we haven't talked about yet is that even in this market of buying and refinancing, you can buy down the rate,
Mm-hmm.
and so I'll let you know if that makes sense or not. But
Yeah.
that's also an option.
So if I have a little bit of extra cash that I may have gotten gifted from a family member or something like that as a first-time home buyer, and I do not like where the rate is sitting at currently, I can just buy that down.
Right.
Okay.
And I think with the first time home buyers, that's really important because um, we got to make sure that because what we do, we look at how much they save each month and the cost of it,
Yeah.
right? And if it takes them 5 or 6 years to get their money back on what they spend for the discount, it doesn't make any sense.
Yeah.
It's too long.
Again, closing costs.
Yeah, I
Eats
mean,
you
you
alive.
add it all up.
Yeah. Dude, Jimmy, that's so good. This has been super helpful knowledge. What's the best way that somebody listening today could reach out to you?
Just give me a call at
Okay.
719-437-5151.
Okay.
And if you go online, if you go on to Facebook and see my business account, you can always do Calendly and set an appointment.
Okay. And
And
that's at Jimmy Lenz.
yes,
Okay.
yes,
And a final word right now. Final word to buyers who feel unsure or stuck right now.
I would say don't get so worked up about the rate,
Mm.
right? Because everybody thinks that the rate's going to come down very quickly. And that's part of what we're hearing. Like maybe a rate drop in June. Well, the thing is that it's going to be a competitive market. If you find your home, like I said, get pre-approved first,
Mm.
then go look. And then we look at the numbers,
Yeah.
right? How much will it cost you to buy that? Oh, also, the seller can also maybe buy down the rate for you for a year.
Some concessions.
Yes. Yeah.
Okay. So you would say to a buyer, like, don't be too concerned. Just come get the information from you. Sit
Yes.
down, have a free consultation, see where I'm at financially and all that. And then you'll be able to help me with the programs, and maybe my realtor can help me with some seller concessions and
Right.
stuff. So I'm not stuck.
No. And
Okay.
don't be so scared.
Yeah.
All right. Just let's get the information because you have strength with information.
Yeah.
If you have no information, you have fear.
Mm-hmm.
So just come get the information. Maybe it works, maybe it doesn't. Let's just take a look at everything.
That's beautiful. Thank you so much, Jimmy.
Thanks, I appreciate it, buddy.
Appreciate you coming by, and we'll see you next
My
time.
pleasure.